For thousands of years, gold has been more than just a metal. It's been a measure of trust. Ancient empires used it to trade, to store power, and to wage wars. It didn't rust, it didn't fade, and, most importantly, everyone agreed it had value. Then came the 20th century. The gold standard tied every dollar to a fixed amount of gold until 1971, when President Nixon ended that link. Since then, our money has been backed not by metal, but by confidence. Confidence in governments, confidence in policy, confidence that the system won't fail. And when that confidence shakes, people always run back to gold. Gold isn't a stock. It doesn't pay dividends. It doesn't produce anything. So why does it matter? Because gold represents the one thing paper money can't promise: permanence. When currencies lose value through inflation, when banks collapse, when trust disappears, gold just sits there, unchanged. It's scarce, it's durable, and it's recognized in every country on Earth. That's why it's still a core reserve for central banks, even in a digital, high-speed world. Every empire in history has eventually turned back to it, right before things got rough. But gold isn't perfect. It's slow, it's heavy, and it doesn't grow like innovation or technology. When economies are booming, gold actually underperforms, because optimism pushes people toward risk, stocks, property, startups. That's why gold is often called a hedge, not a path to wealth. And in the short term, it can be volatile, driven by fear, speculation, or manipulation by big players. Gold shines most when the world looks uncertain. But that also means it shines when everything else is breaking. Right now, gold is breaking records. But this time, it's not just investors driving it, it's governments. Central banks across the world, China, India, Turkey, and others, are buying gold at the fastest pace in 50 years. Why? Because US debt has crossed $35 trillion. Inflation's not going away, and global trust in the dollar is quietly eroding. The world is diversifying, moving away from paper promises. Meanwhile, retail investors are waking up late. They see the headlines, they see the price, and they feel that fear of missing out. But for central banks, this isn't about profit. It's about insurance. A shield against the unknown. So, what does the future of gold look like? If the economy stabilizes, we might see corrections. Gold could cool off. But if inflation stays sticky, if debt keeps rising, and if the world keeps drifting toward uncertainty, gold will keep climbing. Not because it's hot, but because nothing else feels safe. We're entering a cycle where trust is the most valuable currency. And gold, once again, is becoming the language of trust. It's not about getting rich. It's about staying standing. This is the Market Brief Daily.